Welcome, my friends. Will First Republic Bank be the next domino to fall? The news today is that First Republic's future to be discussed as major bank CEOs gather. So, what is First Republic Bank? First Republic Bank is a full-service bank that offers a range of personal and business banking products and services. The bank was founded in 1985 in San Francisco, California, and has since expanded to serve clients in several states across the United States. First Republic Bank offers a variety of banking services, including checking and savings accounts, home loans, personal loans, credit cards, and wealth management services. The bank has a reputation for providing high-quality customer service and personalized attention to its clients. It also focuses on serving high-net-worth individuals, entrepreneurs, and businesses. Up until the past few weeks, First Republic Bank was known for its strong financial performance. But now, it could be on the brink of collapse. As you all know, Silicon Valley Bank has been shut down by federal regulators. And now 4 banks have failed in the United States. What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Major bank chief executives are gathering in Washington for a 2-day scheduled meeting starting on Tuesday, with the future of First Republic Bank to be discussed. The quarterly meeting of the Financial Services Forum will include banking heavyweights, J.P. Morgan Chase & Co.'s Jamie Dimon, and Bank of America Corp.'s Brian Moynihan. Large U.S. banks injected $30 billion in deposits into First Republic Bank on Thursday, swooping in to rescue the lender caught up in a widening crisis. It was triggered by the collapse of 2 other mid-sized U.S. lenders over the past week. First Republic Bank is among the banks that have been speaking to peers and investment firms about potential deals. This comes in the wake of U.S. regulators taking over Silicon Valley Bank and Signature Bank this month amid a flight of depositors. 2 sources familiar with the matter previously said that all options are on the table for First Republic, which could include a sale or equity infusion. J.P. Morgan Chase & Co. is advising First Republic on its options to raise capital from investors. One source familiar with the situation said that the banks were aiming to work out details for what needs to be done for First Republic within the coming 24 hours. News of the meeting was earlier reported by the Financial Times. Shares of First Republic jumped 55% on Tuesday. In a boost to sentiment, U.S. Treasury Secretary Janet Yellen said that while the U.S. banking system is stabilizing, further steps to protect bank depositors may be warranted if smaller institutions suffer deposit runs. This comes after 3 banks in the United States have failed suddenly: Silvergate Bank of San Diego, Silicon Valley Bank, headquartered in Santa Clara, and Signature Bank, in New York City. And, over the weekend, Swiss banking giant Credit Suisse was combined with UBS in a shotgun merger. First Republic Bank is struggling to remain viable following a flight of deposits, is looking at ways it can downsize if its attempts to raise new capital fail, according to 3 people familiar with the matter. First Republic has been working with J.P. Morgan Chase & Co. to find new sources of capital after a consortium of major banks provided it with a total of $30 billion in deposits last week in a move of solidarity. Unrealized mark-to-market losses in First Republic's loan book and investment portfolio have been an obstacle to clinching an investment. A sale of the bank or capital injection are also options, The Wall Street Journal reported, again citing people familiar with the matter. A consortium of 11 U.S. banks collectively deposited $30 billion in First Republic Bank, including Bank of America, Citigroup, and J.P. Morgan Chase. The deposit is designed to boost confidence. It didn't work as the stock fell 33% Friday. The latest development, and the prospect of another rescue attempt, didn't initially reassure investors, but it may yet have a stabilizing effect. The stock of First Republic Bank jumped as much as 60% today. This put it on pace for the biggest ever daily gain, with fellow regional lenders including Western Alliance Bancorp and PacWest Bancorp also staging double-digit moves. The KBW Regional Banking Index surged by as much as 5.5%, boosted by a broad rally across the sector. First Republic extended their rally to a session high following a Reuters report that the lender is looking at how it could downsize if attempts to raise new capital fail. Shares had earlier climbed on optimism over a new plan under discussion to aid First Republic. Under the plan, Some or all of the $30 billion in deposits that a group of U.S. banks injected would be converted into a capital infusion. A potential conversion could add much-needed stability and is another vote of confidence for the embroiled lender. First Republic's potential collapse comes after the failure of Silicon Valley Bank. Let's take a closer look at Silicon Valley Bank. Silicon Valley Bank offers a range of financial services, including commercial banking, investment banking, asset management, wealth management, and international banking. The bank's focus on technology and innovation. It has helped it develop specialized services tailored to the unique needs of startups and emerging companies. Lending and credit facilities, payment and treasury management, and investment and advisory services. Silicon Valley Bank also provides valuable resources to its clients, including networking events, educational programs, and market research. The bank has established partnerships with leading technology and venture capital firms. Its global network includes offices in the United States, Europe, and Asia. Overall, Silicon Valley Bank has become a trusted partner for startups and innovative companies looking to grow and scale their businesses. Its specialized focus on technology and innovation. It has combined this with its extensive expertise and resources. Silicon Valley Bank has become a unique and valuable player in the banking industry. Well, that was yesterday. Financial regulators have closed Silicon Valley Bank. The California Department of Financial Protection and Innovation closed Silicon Valley Bank and named the FDIC as the receiver. The FDIC in turn has created the Deposit Insurance National Bank of Santa Clara, which now holds the insured deposits from Silicon Valley Bank. The FDIC said in the announcement that insured depositors will have access to their deposits no later than Monday morning. The FDIC also said Silicon Valley Bank's official checks will continue to clear. The FDIC's standard insurance covers up to $250,000 per depositor, per bank, for each account ownership category. It is unclear exactly how larger accounts or credit lines for companies will be impacted by the closure. The FDIC said it will pay uninsured depositors an advanced dividend within the next week. As of the end of December, Silicon Valley Bank had roughly $209 billion in total assets and $175.4 billion in total deposits, according to the press release. The FDIC said it was unclear what portion of those deposits were above the insurance limit. Silicon Valley Bank was a major bank for venture-backed companies, which were already under pressure due to higher interest rates and slowdown for initial public offerings. The closure of Silicon Valley Bank would impact not only the deposits, but also credit facilities and other forms of financing. The FDIC said loan customers of Silicon Valley Bank should continue to make their payments as normal. The move represents a rapid downfall for Silicon Valley Bank. On Wednesday, the bank announced that it was looking to raise more than $2 billion in additional capital. That comes after suffering a $1.8 billion loss on asset sales. The shares of parent company Silicon Valley Bank Financial Group fell 60% on Thursday. Then, they dropped another 60% in pre-market trading on Friday before being halted. However, a rapid outflow of deposits was complicating the sales process. There seems to be a lot of financial turmoil in Silicon Valley these days. And, if you follow this channel, you probably already know that tech companies are sensing weak macroeconomic conditions. Inflation is raging in most parts of the world. Central banks are aggressively raising interest rates in order to tame inflation. Consumers' budgets are getting tighter because of having to spend more on gas and food. So, consumer discretionary spending is weakening. Corporate marketers are cutting their ad budgets, especially online. And ad revenue is the lifeblood of many big tech companies. Layoffs at big tech companies are big news because the biggest tech companies went on a veritable hiring spree throughout the pandemic. But the United States is now teetering on the brink of recession and the digital ad market has plunged. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.